Tesla TSLA Beginner's Guide. If you have ever sat in a car that drives itself down the highway while the steering wheel turns on its own, you have experienced the product Tesla, ticker TSLA, is trying to build the rest of its business around. Tesla started as an electric car company, but today it is really four things stitched together: cars, energy storage, software that drives the cars, and a humanoid robot. This is an educational walkthrough of the business, not stock advice. Just enough background so the next time you read a Tesla headline, you actually know what they are talking about. So, what does Tesla actually do? Tesla has three reported business lines. The biggest is automotive, which brought in $16 billion of revenue last quarter, about 73% of the total. This is the vehicles themselves. Model 3 and Model Y are the high-volume sedans and SUVs. The Cybertruck is the angular pickup, and two newer products are starting to roll off production lines: Cybercab, a small two-seat robotaxi, and Semi, the heavy-duty truck. They delivered 358,000 vehicles in the quarter, up 6% from a year ago, and their gross margin on cars excluding regulatory credits was 19.2%, meaning for every dollar of car revenue, they keep about 19 cents after the direct cost of making the car. The second segment is services and other, 17% of revenue at $3.7 billion. This is the everything else bucket: service centers, used cars, the supercharger charging network, insurance, and the robotaxi business. Robotaxi paid miles nearly doubled quarter over quarter, small in dollar terms today, but the seed of something bigger. The third segment is energy generation and storage, 11% of revenue at $2.4 billion. This is the Mega Pack, a giant battery the size of a shipping container that utilities buy to store electricity, plus Powerwall for homes and solar panels. Energy gross margin hit 39.5% last quarter, helped by a one-time benefit. To picture the whole machine, think of three boxes. On the left, suppliers feed Tesla battery cells, AI chips, and raw materials like lithium and nickel. In the middle, Tesla turns those inputs into vehicles: energy storage, FSD, full self-driving, software, and the Optimus humanoid robot. On the right, customers buy from Tesla: individual car owners, robotaxi fleet operators, utilities buying mega packs, and homeowners installing Powerwalls. So who does Tesla compete with, and how does it win? Tesla has what analysts call a narrow moat. Moat just means competitive advantage, the thing that keeps other companies from catching up. Narrow means it exists, but is not bulletproof. There are three pieces. First, Tesla is vertically integrated, which is a fancy way of saying they make a lot of their own stuff in-house: battery cells, AI chips, factories, and software. Most car companies buy these from outside suppliers, which slows them down and costs more. The catch is that one Chinese competitor, BYD, has copied this vertical integration playbook successfully and is now the biggest threat globally. Second, the supercharger network and the FSD data flywheel create switching costs, meaning it is annoying or expensive to leave the product for a competitor. Tesla has more than 80,000 charging connectors worldwide, and the US auto industry has now adopted Tesla's plug as the standard. Their full self-driving software has been trained on nearly 10 billion miles of real-world driving data, the kind of dataset that takes years to replicate. The catch is that Tesla is opening supercharger access to other automakers, trading exclusivity for revenue. Third, the brand and Elon Musk are, depending on the day, the biggest asset or the biggest liability. Tesla spends almost nothing on traditional advertising because Musk's personal following does the marketing. But that same dependence on one person means the company's reputation is unusually tied to one individual's actions. What are the key drivers for the business over the past 5 years? There are three stories that explain the last 5 years. First, vehicle volume scaled enormously. Tesla went from a niche manufacturer to a company shipping over 9 million cumulative vehicles. Production capacity is now more than 2.25 million vehicles per year across 4 factories. That scale turned an unprofitable company into one that hit $14 billion of operating profit at its peak. Then in 2023 and 2024, Tesla cut prices aggressively to fight Chinese EV competition, and auto gross margins dropped from 29% all the way below 16%. Today, those margins are climbing back, sitting around 19%. The second story is software and services emerging as a higher margin layer on top of the car business. FSD subscribers grew from almost 0 to 1.28 million paying users, up 51% in just the last year. Robotaxi is generating actual paid miles now, even if the dollars are still small. These software-based revenue streams matter because they earn higher margins than physical car hardware. Once you have written the software, selling another subscription costs almost nothing extra. The third story is energy storage going from a side hustle to a meaningful profit contributor. The Megapack business has strong demand from utilities trying to stabilize power grids that increasingly run on wind and solar. Tesla is building a third Megapack factory near Houston specifically to keep up. This diversifies Tesla beyond the cyclical car business, which goes up and down with the broader economy. To wrap up, here is the one-sentence summary. Tesla is an electric vehicle company that is trying to evolve into a software and services company, with energy storage, full self-driving subscriptions, robot access, and a humanoid robot as the optional upside layers on top of the core car business. If you want to keep an eye on one thing as you learn more, watch the Robotaxi rollout and the FSD subscriber count. Both are early signals of whether the software and services story is real, or whether Tesla stays primarily a car company competing in a brutal global auto market. As always, this is educational only, not investment advice. Now you know what Tesla actually does, and you can read the next headline with a bit more context.